The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 9th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. You can always send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 134 points at 20,188, about 0.7% to the upside. The S&P up 0.6. That's trading out at 2307. That's about 13 points to the upside. NDX 100 is a little bit of a laggard out here. Not the laggard, a little bit of a laggard, up 0.3% or 16 points. The laggard happens to be the semiconductor index, off 3 points. Not a big deal to the downside. Gold is off $5, trading at $12.34. Silver is flat, trading at $17.71. Light sweet crude is up 67 cents. That's 1 3/10% to the upside. To the upside in the clubhouse. Leader-wise, what we've got is Tyler Technologies up 11% or $16. Fleet Core Technologies, you got to like the technology group. I don't know why you have to like them, but they are the leaders today, up $16. Actually, that should be in first place here. That's 11% to the upside. Priceline is up 10. Chipotle is up 11. Pioneer Natural Resources up 10. Treehouse Foods up 10. To the downside, Dun & Bradstreet. It's done. It's off 16%. It's down 20 buckaroonies. iRobot Corp down $8 or 14%. Vista Outdoor, that's down 22%. Nearly $6 to the downside. Sealed Air is letting a lot of air get out of its tires. Not that they do tires, but they are down 9%. So where do we want to begin? I tell you where we should begin. Had a viewer, listener, I sent in a email request earlier in the morning, and I said that I would get to it. Let's just go ahead, because this will help me to lead into, hey, what are the markets doing? What should we expect? So on and so forth. So this is Rob in Columbia, South Carolina. And Rob said, in essence, STM is the ticker symbol that he wants to look at. That is I don't know if it's Saint Microelectronics, NV out there. It's something like that. And they are in the electronics business. So I'm not sure what the S and the T stand for, but we're going to go with Saint Microelectronics. And what Rob says is looks like Short City out here. Take a look at this little rocket ship. So Short City, he goes on to identify a 3-gap play, island reversal, and way overbought. So let's go take a look at those conclusions, all good conclusions, and let's go see if we can figure out what they actually mean. Now, when we take a look at this equity, whenever I see something like this, and I see all these gaps, you might say, what are all these gaps? Let me put this chart up on the screen here that just simply identifies gaps to the upside, gaps to the downside. In this case here, they're called falling windows or rising windows. Whenever I see something like this, The very first thought that goes across my mind is currency issues that this equity has. And sure enough, they are a Swiss-based company out here. And the reason I want to take a look at that, why I think you should take a look at it, is anything that has currency conversion issues going on means that all these gaps are basically irrelevant. So from that standpoint, that even to a certain extent, the island reversal, in fact, it's probably clearer to take a look at it on this chart here, may not have as much meaning as it might on a stock, let's just say like Apple as an example. You know, some U.S.-based stock here, since we're in a U.S.-based stock market, and you're not having to deal with that currency conversion. Now, if it's Switzerland, you know, the Swiss franc, maybe there shouldn't be that much. But look, whenever I see that, I automatically am saying, okay, there's a lot of there's a lot here that we can't rely upon as far as normal technical analysis. But look, you are completely right. Lots of gaps. No, there's just not 3 gaps out here. There's like a gazillion gap play. So we'll just take the 3 gap play, one that we noticed potentially yesterday. I forget the stock symbol on that. We'll just kind of take that off of the table here. We're just going to assume that Swiss-based company currency conversion. So let's not look at that. You are correct. There is an island top out here. I haven't had the chance to go see if these island tops have meant anything. For example, you and I can look at the trading session here of December 30th. We could have reached the same conclusion. That's clearly an island top. That lasted for a period of about 5 or 6 days, and then price went ahead and moved to the upside. So I don't know that even the island tops inside of ST or St. Microelectronics are really going to be the real key here. Now, you mentioned that it overbought, way overbought. Now, there's a lot of different ways that we can that we use 2 different tools to help us identify if something overbought, oversold. So one of those, the traditional type tool out there that people use, would be the relative strength index. Now, and this would be the typical relative strength index here. We're using a 14 period. And so in that instance, Rob, if that's what you're using and you're saying, hey, this is way overbought, anything above the red line here, which is the 70 level, many consider to be overbought. Now, the most bullish way an overbought condition can be worked off is just simply by trading somewhat sideways to slightly lower versus a full-out retracement. In fact, if we want to say that this stock is overbought when it gets up into that 70 level, when was the last time that this thing was oversold, right? The last time that this thing was oversold was at the bottom that formed in February 2016. There have been plenty of overbought, so to speak. We're using that term overbought, just utilizing the relative strength index, the 14 period, and looking for areas where this thing gets above the 70 level out here. And so is the mere fact that it gets that overbought condition a serious matter? Or, as you point out, short city? It hasn't been in the past out here, and so I don't necessarily think that is going to be an indication that you should just automatically jump on this to the short side. If we take a look at TAS market profiles as an example, it's trading above its daily, its weekly boxes out here. So not until you were to see a close below 1280, and it's at 1377, and since we mentioned the price points of $13 or $12, and we're looking at a little rocket ship like this, we don't even want to come close to shorting a $13 instrument. Not even close, especially something that has been an absolute little rocket ship out here and isn't anywhere near its highs, right? Now we take it back on the monthly basis, $73. You don't want to short a $13 stock. And so I think all the items that you mentioned are important. And we're going to go ahead and try to talk about those when we get back from this break and figure out what the market is doing as well. Be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I want to stick with Saint Microelectronics, or STM as a ticker symbol, just for a few more minutes here. And so, Rob, one of the, and again, I don't know if you're using the RSI to help determine overbought, oversold type conditions out here, but at this stage, I'm going to assume that you have. This is the 14 period. Another way to, and really the way that normal price behavior works is you'll see, utilizing this tool, you'll see it go from the 70 level down to the 30, back to the 70, 30, and so on over a period of time. And that's just kind of like a normal EKG. I have found the better EKG system utilizing the relative strength indicator is to switch it to a 3 period. Yep, that's where, in fact, I developed an entire system called the Rhodes Momentum Indicator that really helps us to understand the power of the move to the upside or to the downside. In fact, I'll show you what it looks like. I normally don't use these high-low, open-close bars out here. I like to use candlesticks. They're just easy to pick up on what the market's communicating to you. And you'll see different red and green boxes here. And in this case here, this is showing us the EKG. This is showing us super strong momentum. So even though in one sense you could say, hey, look, this thing is very overbought, you really, the relative strength indicator is a momentum indicator. Momentum to the upside, momentum to the downside. If you really want to understand, and go ahead and mess around with this yourself. Of course, there's a as I say, an entire strategy that I developed around this because of the information, because of the powerful information that it provides to us. Now, it's really powerful information in markets that have momentum to the upside or the downside, markets where you stand. The reason why you and I haven't really talked about this in looking at the indices for a period of time is because we haven't had a lot of momentum, so to speak, more sideways-ish, slightly high, type market out here. Nonetheless, if we take a look at this, you don't see any green boxes. And when you don't see any green boxes and all you are seeing are these red boxes with these U's, uptrends, in this case here, even the green boxes are indicating an uptrend out here. This just tells us this trend is super strong. Now, maybe you didn't need this set of indicators, but if you're utilizing the relative strength, that's how I'm kind of, diverging into it because it's very, very helpful to get a better read on the market, in this case here, STM. So my suggestion to you is take a look at this stock and not think of it as a short candidate, but really try to find out where is the next spot to come in on the long side for this equity out here. So that was for Rob in Columbia, South Carolina. Now, let's go take a look at the market. Let's try to figure out, hey, where are we at? What are we doing? Well, it's very simple where we're at in the Dow, and let's stay focused on the Dow here. We're 135 points higher today, 20,189. Now, what is it about the Dow that you and I know? Well, we know this, and we've known this for a long period of time, have we not? If we just simply take a look at our cyclical chart of the Dow, in this case here, you and I are looking at two different cycle patterns, one associated with the annual cycle. Those would be notated with the red markings out here. This is when the Dow typically forms peaks and troughs, right? So we'll call it our tops and bottoms, highs and lows out here. And what we know is that typically, not always, but typically in the month of January, towards the end of January, is when on an annual basis, the Dow, you would expect to find some type of bottom after the Santa Claus, after the hangover retracement out here. Now, instead of January 30th, and these line charts are always looking at closing sessions. So intraday, if you're going to look at a bar chart, you're going to come up with different dates than the ones that I'm providing you with here. But all of my historical data is based on the close, not what's going on intraday. And on a closing basis, that low is typically on an annual basis comes in around January 30th. It's not always on the exact same date. We use these as guidelines out here. And this year, the low inside the Dow on a closing basis is January 19th. Versus January 30th out there. Now, we also happen to have a new president, right? We have, not only do we have a new president, we have one from a different party, or so to speak, from a different party. I'm not so sure about that, but that's a whole different thing. I don't even know why I said it other than I always say it because I don't know. But that doesn't really matter. Actually, it does matter from the stock charts, and that's the reason why I say it. But in this case here, what we know is that a typical, if we averaged out all first-term presidents out here, the first bottom that comes in the market is on January 23rd. In this case here, the actual closing low was January 19th. Not too shabby, eh? Yeah, not shabby at all. Now, here's the deal. There's some other intraday time periods, which I'm not going to go and take a look at, but the next top that is supposed to arrive. So we knew this. You and I knew this. I knew this yesterday when I went ahead and took a short position inside the S&P 500. Why? Because I saw enough topping patterns. I mean, enough topping patterns where they were just hitting me upside the head like a 2x4 and said, okay, maybe going to be early. But because of everything that was in place, and we'll see by the end of the day whether those things are in place or not any longer. We may take a look at some of those during this show or even Tom's show. He won't be able to do the 3 o'clock or 4 o'clock show, so I'll do 3, and Polar Bear will do the 4 o'clock show. But here's what we know, and that is that the Dow is scheduled to make a closing high, sometime between tomorrow and you can go out even a week from tomorrow out there. So the markets are moving higher. They're actually doing exactly as anticipated. And you could say, well, why did you go short yesterday? Again, all of these other signals out here, and it said, you know what, time to begin a position. I wasn't expecting as much of a takeoff as we had today, but it's not as if that's unusual. It's with regard to the markets moving higher, the question is how high, and that's where you have to go take a look at some other tools out here. Now, some of those other tools, as you and I know, when you get above all forms of resistance, that means there's not anything on the left-hand side of the chart for us to figure out where is price headed to. Then we have to scratch our head like I just did. And after we're done scratching our head, we have to say, well, which of those tools should we use? We probably should use all of them. One of those tools is just simply take a look at what we'll call significant prior swing points and trying to find a Fibonacci expansion of that level. 1.272, 1.618, those would be ideal places. However, you and I, we have another tool as well. We have what we call those horizontal trading ranges. Bud Rolfs is the one that introduced him to both you and I, called primary trading ranges. However, because of automation, we've been able to refer to them as horizontal trading ranges because I use them differently than the way in which he teaches. Both are correct out here. Now, if we take a look at we have different time frames for us to go take a look at these. If I take a look at the monthly, that's the red line that now shows up on our chart. That low that came in that we took a look at was nothing more than a test of a horizontal trading range on a monthly basis. These are daily candles that we're looking at out here. So that 19,724 level, significant support out here. But as I said, this is a daily chart. So what are the daily pieces of information communicating to you and I? Well, what the daily pieces actually are communicating to you and I, and those are going to be the ones that are in blue, are that 19,705 area was also strong support. And 20,000, room 222, which we basically hit today, is strong resistance. Let's talk about that when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. A couple great questions inside the Tiger's Den with regard to this chart that you and I are looking at, which is of the Dow and the green, red, and blue lines. The red lines, these are all the primary horizontal trading ranges. These are not midpoints. There is no midpoints on here. I can turn those on, but I'm not really interested right now in taking a look at midpoint lines. Those would show up as small little dots or dashes, just like you'll see on the daily right now inside the Dow, the midpoint at about 2192. So we're not really going to look at that. We're just looking at the solid lines here, which are stronger levels of support or resistance, oftentimes referred to as Bud Rolfe said, termed it as ice out there. Now, we know that the Dow is close to, and again, these numbers were used not as exact. We just take a look at these lines, these levels here, to understand that they are significant, potentially significant areas of support or resistance. And the reason that you and I are just focused on the Dow, because the other question was, hey, can we look at this for the S&P, NASDAQ, Russell 2000, many, many others out there. The reason why I'm not focused on that during this show here is because to go back to the cycle pattern that I've done with regard to either presidential cycle pattern, annual cycle pattern, 10-year, 4-year, you name it, all those different cycles out here, all that's been done with my Dow data. And I just simply have started from this 85 years worth of data. I don't have 85 years worth of data inside those other indices out there. And so the more the merrier. And it would show different numbers. Well, PTR levels or horizontal trading range levels inside the S&P and the IWM and everything are going to show something different than what we have out here. So this is indicating to us that with regard to forming a top coming into tomorrow, between tomorrow and then next Friday out here, it's all really lining up. Now, you take out this 22.25 level, and there is no reason for the Dow not to make its next move higher, which is 20,454. Again, we really don't know the levels of significant resistance, right? Other than because we don't have no left-hand side data. And really, for me to go ahead and give you what's the Fibonacci expansion, where the market just really consolidated sideways out here, nah, it's not even worth it. The range is just so small, it's just not worth it. I mean, we may come up with the same things out here, same numbers in essence, or very close to it, but really, for me, it's just simply not worth it. Now, if we go from here, which we will, so let's go from here. Let me switch over to my indice charts. Give me a moment to flip that switch, and we take a look at the Dow. Let's go figure out what the Dow is doing. And what the Dow is doing, it happened to get into what I have labeled as either in its fourth or its seventh wave. Now, magically delicious. And it's also moving higher with less relative energy. Now, it has been doing that for quite some time, and we've seen some failed price relative strength divergent patterns out here where we have bearish reversal signals, such as this bear sash candle back here. Looks like around the 18th, 19th, something like that. We have a little falling window back here in the end of January. That should have been a top. But at this stage here, price is above my oscillator unchanged line at 20,139. Price would need to close back below that in order for today to be considered a failure out here. But we can see that price is moving higher and doing a less relative energy. We also know that 1, 2, 3 days ago, it formed a time to mark sequential 13 count. Now, not until you close below Stevie's red line. There are other ways to do it, such as looking the low of the bar 4 bars prior out here would be another signal. But in this case here, again, we have signs of a top. We know that seasonally, or you don't know it, but I shared that with you, that seasonally tops can form between now and next Friday out here. In price moving in, we have topping-ish type patterns. They looked more topping-ish yesterday than they did today, but even with the moves higher today, they still look toppy. And with regard to, if we take a look at what else, so that's really the Dow. Let me switch back. Let's go take a look at the Dow equity futures contract. So let's do that, and then we'll go take a look at some other things. I'm sure there's emails here saying, goodness sakes, would you get to gold already out there? And so the answer is, yeah, we'll do that next to the mining equities. So we can see even inside the equity futures contract, YM out here, price also moving higher, doing less relative edge. Just the same patterns out here, whether it's in the futures contract or whether it is in the cash indice out here. So that's what the markets are doing. And at this stage here, I don't have any reason to believe that the markets are still not in the process of forming a short-term top. And I do mean short-term, but that short-term could last for weeks. Those weeks could be multiple weeks out there, which is what I suspect is the deal. And I don't think that the retracement or the pullback is anything majorly significant, such as, much more than 10%, if 10% at all. But 10% would be a heck of a drop. Some might even call it a candy bar, a hell of a drop out there, right? Because you're talking about 2,000 points as 10% potentially inside of the Dow. Is that what I expect? Is that what I anticipate? I expect there to be a retracement, and we'll just simply take things one day at a time, one moment at a time. Now, with regard to one moment at a time, let's take a look at gold. What is gold doing? What are the miners doing out here? Well, if we take a look at Goldilocks specifically, trade out of 1235.90. Now, it's doing that in the face of a rejection of a level of support inside of the Japanese yen. And this has been a nice move with regard to this currency pair. You and I, we've taken a look at the level of support, that TAS weekly profile. We know that that is a significant level of support. You are the one that said, look, if the Japanese yen is going to find support here, pretty good chance it's going to go ahead and bounce up to 113.70. Well, so far the high's been 113.29. So it has just a tad to go before it gets up to that first level of potential resistance. What is that? That's a brand new box that formed inside of the yen. And what we said was, okay, so fasten your seatbelts and get ready for some type of retracement inside of gold and the mining equities. And that's what we have going on here today. But shoot, it's hardly a retracement. Man, there is no stronger message. There's no stronger message to me. I don't know about you, but no stronger message to me that that we're looking at really strong mining sector out here. I mean, as if it is just getting going. You can't expect things to continue to go straight up or straight down. I mean, you can pray, you can wish. Of course, that would make trading and investing easier. And the question is evaluating when it's not going straight up or straight down, what's it doing and what is it that we should do out here. So back to the ranch when we take a look at gold, which has had nary a movement out here. And it's also set up where, shoot, one could be or should be worried, right? I think we talked about some of this yesterday, or we might have done it when we were taking a look at I don't remember what we were taking a look at. But if we do take a look at Goldilocks out here, I mean, it's possible. Not just possible. You want to talk about strong areas of resistance as well inside of gold. Yesterday was a Tom DeMark sequential 13 count out there. Not only was it that was a strategic pause. You can see it's also in that seventh wave, potentially wave number 7 yesterday. So no wonder it's stalling a bit. But folks, gold has to close below 1221 for the hair on the back of my neck to even begin to stand up out here. And in fact, all that we've seen today is a test of that weekly TAS market profile high. Mucho strong, Goldilocks, hi-ho silver.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 132. S&P is up $13. And we're talking about gold here. Earlier, we were talking about Steve's the Rhodes momentum indicator signals. Those are the little green and red boxes that show up on my screen here. And it's a very cool trading strategy, especially when you have things that are trending out here. And we can just simply, now you didn't need this necessarily to help us to identify the trend that is currently going on inside of gold. But what it does is it really helps you to truly understand the strength. And it was just yesterday that it formed another one of those red boxes out here. You can see this forming above a prior red box, designating that the clear uptrend here. Now, you can use this as an entire trading strategy. We're not going to go into that. What you're really looking for when an uptrend begins, such as this one, is you're looking for when that, well, there's two ways to trade it. One of those is looking for when that next green box arrives, which I did back here, this swing point in the end of January. And as soon as you see it close above that, boom, you're stepping on the gas. It says, okay, I'm ready to resume. I'm ready to begin my relay race out here and move to the upside. And you continue to take out the highs of these red boxes here. They are the places where you can add to your position. So it's a really great tool to help measure the momentum. So this is a real momentum trader's strategy out here. And to have taken your largest position when you believe the bottom formed, and then adding to your position along the way as breakouts are occurring, and then as there's a retracement, then when you're going to add to that in the next larger way. So it's a very cool tool to help us really monitor the power of that momentum that is inside of the marketplace. With regard to mining equities per se, what are they doing out here? Let's just take a look at the GDX. Let's just take a look at the entire kit and caboodle. I believe what we're going to see, it's doing nothing more than just pulling back to Stevie's red line. It's red line, right? Never even made it all the way back there. Doesn't mean that it won't, but that's at about 24.75. So today's pullback, nothing more than a potential test of it's a significant support area, that being 24.75. Let's stay with the GDX for a moment. Let's go take a look at the volume inside of it as of 144. get a feel for what it is doing. And if we take a look at this, we know that the GDX ran into some significant resistance, right? That TAS weekly profile, that's at 25.35. We're trading out at 25.14. Volume on this. Yeah, what is the volume on this? Well, you got to turn it on. And I just reserve the right to call myself names. You can't call myself those same names out here, but you can fill in the blank. And in this case here, volume today, 33 million shares, going against 75 million shares. Yeah. So the pullback today, light volume. We can see also that you have a brand new daily profile that formed. Remember, this profile formed today with price being above the box. It doesn't get much more bullish than that profile-wise. Doesn't mean that it can't pull back into it, but it is right now. We have to go with the meaning as we see it right now, and this is saying, man, very strong. Light volume, brand new profile, price is above that box out here. There's nothing weak other than the yen with regard to what's going on inside the overall mining sector using GDX as that number versus anyways, it's very strong, very strong. All right, so I see some notes here in the den. One says to see, can you examine S&P futures contract, identify counts on 5-hour 30-minute charts? Thanks, John. Yes. And then Danny says, does the doji at a high mean anything? Yeah, Danny, give me a doji at the high that you're referring to, and then we can go take a look at that meaning. Because yes and no, but the doji means that it's tired. Basically, it means it's tired, right? It's confused. It may have lost its way out there. So Danny says the GDX. So we'll take a look at that. But one question at a time. Let me first go in order here, and let's take a look at the ES-mini. Let's start with the 30-minute chart out here. So the counts that I have inside the 30-minute chart are that we are in that it has formed wave number 6, potentially 7 out here. Now, I don't want to use the TAS profiles on this chart here, so I'm going to switch over to the other chart since they're actually a bit more accurate. So let's go over to which chart? Let's go to this chart. So let's take a look at this chart. So here is what the GDX is looking like. Let me turn off a number of things out here, although you can pretty much see it, but I want to make sure that you see it clearly. Here's what we know. You have a 1 to 1.618, A to B equals CD to the upside. We had a set of expansion, a set of swing points, with the expansion of those swing points being 1.618 to 2303. What does that mean? That means there's the potential of a butterfly that has formed. The problem is there is no bearish reversal signal inside here. All that we have is, if we take a look at this last up thrust, that being between 11 and 11:30, all the trading here, Mr. Z, is within inside this bar, right? And if within basically 7 bars, we're at 1, 2, 3, 4, 5, and it really doesn't have to be 7, but if there is a breakout to the upside above, just simply close above the closing high at 11 o'clock, which was 2305.50, then that tells us that their next momentum move is in play. That's Japanese candlestick charting. That would be called the rising 3. Even though you can do it in 7 or 8 bars out there. In any event, but there is a topping-ish type pattern. And even if this one fails, what this, and here the boxes, that's really what I was going to get to, right? If we turn off all this stuff, what we can see, turn off the Fibonacci retracements. I was going to try to. I guess I got to do this first. There we go. Now I can do it. If we take a look at this set of boxes here, really it is sellers that are in control of the price area here, 2306 to 2297. So what that would also say is closing above 2306, a strong area of resistance failed, and then no reason for price not to move higher. It doesn't tell us to where, right? That's the biggest issue out here. And what it would also say to us is you would potentially then be moving into wave number 7 out here, which would be labeled G, because right now I've got the characters on there. So that's what the 30-minute chart tells me. Now, when I take a look at a 5-hour chart, this 5-hour chart has a different set of bars than what other systems sometimes use out here. And I don't know why. I think it's because they're just simply lazy to go back and properly set the time with regard to the contract, which opens at 6 o'clock on a Sunday evening. And that's when you start counting your 5 hours. And then when the contract closes at the end of the trading session the next day, boom, that should be it. And you start back over again. And man, in any event here, my system has us in wave count number 6 as well. Wave count number 6 being F as we take a look at it on the 5-hour chart. And if we look at the 5-hour chart, let's go back to this other chart out here. Well, let me go repopulate this so I don't forget to do that here. Let's turn that tool back on, turn that on, turn that on, turn that on. Now I got everything out on here. If I look at the 5-hour time frame, just to make sure that I can give you the proper profiles before we go to the break. Come on, show up. Oh man, where is it? Where is it? I'll punch it up on the screen while we're at break, and that way you can see it. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So now let's go back to the GDX, because the question that was posed inside the Tiger's Den from Danny in Atlanta asked if the GDX had a doji candle yesterday, and the answer is it did. Let's take a look at this here. Let me go ahead and edit this chart here. Let's make it real clear for everyone. Let's go ahead and remove the Taz profiles. There we go. So now we're just looking at candles. Now, a doji, a real doji, folks, is where the open and close price is nearly virtually the same. Really, virtually the same would be the accurate. It can be nearly. Means it should have very, very, very little. For example, if you take a look at this candle session here on January 17th, that is not a doji. Don't let anybody tell you that's a doji. Why? Because it's not. At least with regard to Japanese candlestick charting. This is not a doji here on January 26th. This is not a doji out here on January 24th. This is a doji out here on November 22nd. But the doji that was asked about by Danny was this one right here from yesterday. And the question was, does a doji at a high have meaning? And it does have meaning. Number one is, and especially at highs out here, because this is where traders are becoming ambivalent, right? And this is like a tug of war. And if we take a look at a tug of war, yes, this is at highs. And by at highs, what we mean is other forms of resistance. That's what I actually mean when we say at highs. So at highs, at other areas of resistance, yes. It is a huge meaning to other areas of resistance. Well, if we come back here and take a look at other bearish reversal signals inside the GDX, you've got the gap to the downside, right? That's at the 25.65 level. What did that doji hit yesterday? Yeah, it got up to 25.71. The volume yesterday, 41 million shares, going against the downdraft of 232 million shares. Of course, it should have some trouble here. You know, it's trying to gather up all of its friends in order to be able to take on that big bully out there from October the 4th. It doesn't want to do it alone. All right, so no wonder there was some ambivalence here. You've got another bearish reversal signal out here, a little bearish engulfing candle on November 2nd. That's at this 25.65. So absolutely an area of tough sledging out here. Remember, though, what the friends are that the GDX is looking for, and gold is really its friends over in Japan. And they're trying to get him away from the sake bar out there, and I can understand why they're sitting at the sake bar. If you've never had great cold sake, you don't know what you're missing. But they'll eventually get away from the sake bar. We think once the price gets up to that Taz daily profile high, that 113.77 type area. Now, today it is actually a bearish message as well, Danny, because as the Japanese say, you've got leaves falling off the trees here. All right, because we have price closing below the doji. But you and I have many different tools out here. We also know that price is pulling back on light volume. 34 million shares today versus 74. Sorry. Brand new Taz daily profile that we covered with price being above that profile. That is bullish out here. Any pullback inside the GDX further to the downside, which it could, look for 24.13 to act as support. Am I worried as we speak just yet that this is it? This is the high? Absolutely, positively not. And will I change my mind? I will change my mind when we get the signals that say, hey, guess what? Something else is going on in Doji Town out there. So, folks, stay tuned. Our favorite polar bear, David White, will be up next. As I mentioned, Tom will not be in at the 3 and 4 o'clock hour. So David and I will be doing double duty out here. He'll do 4 to 5. I'll do 3 to 4. If you've got something that you want me to take a look at during that 3 to 4, I would be honored to. Just send me an email, steve@tfnn.com. Post a note inside the Tiger's Den, or better yet, give me a call. So have a terrific Thursday. We'll see you on Fantastic Friday, or in an hour or so. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.